public information. Then you have the secondary markets that helps match buyers and sellers, provides information to the masses, allows people to grow their wealth through asset management. And now we're going to see how that all starts to come together when we get in real life scenarios. So let's take this particular scenario. We're looking at AIG. AIG needs cash to pay back the U.S. government. This is around 2008, 2009, 2010. Some of the time period that that Terry and I kind of lived through. So where we're starting now in terms of AIG. So AIG owns a majority, 58% of AIA Group. And what's AIA? AIA is a high growth, high return Asian subsidiary. Typically the GDP of Asia grows around 8 to 10%. High growth. There's a lot of growth that's coming out there. So, this is definitely a lucrative asset if you are a U.S. company that has an ownership within China, which is growing at such a great rate. You want a piece of that. Only thing is that AIG is insured, back during the debt crisis. So at that time, the company wasn't doing so well because a lot of their investments weren't being valued well. So in this particular case, AIG was looking to sell off this high growth asset because they needed money to pay Uncle Sam, and this was a good time to sell off something that was very lucrative. So who did they consult? They said, Prudential said, I'd like to get a piece of that Asia action. I'd like to get a piece of some of that growth within Asia because that's where I want to take my business plan. And they went out to their public. They went out to AIG and said, we want to purchase this particular asset because we need some mind share there in Asia. So now hopefully the scenario is coming across to you now. Well, don't forget about the shareholders because AIG is not the sole owner of this high growth Asian asset. There's other private shareholders that own 42%. I don't know about you, but that's a large amount. So you can't just make decisions by yourself. You have to take into account some of your shareholders. So the deeper we dig into this, the more interesting it gets. So, what's next? Okay, so AIG is looking. So, I can sell to Prudential, but what's another option? Anybody have an idea what's another option that could possibly be done? Feel free to type it into the chat. So if you're not selling it, well, someone put in debt. Someone said IPO. So there we go. So if I'm not selling it to Prudential, let me do an IPO, an initial public offering, or sometimes called a spin-off as well, because I'm looking to divest these assets in order to reap a lucrative return on this asset. So maybe if you do an IPO to investors that are looking to get a foot into the emerging markets area, something high growth. So that's a scenario. So what happened? Okay, so Prudential said, I'm going to offer you $35.5 billion for this AIA asset. They said, AIG said, well, I don't know, this is we need some more money to pay back Uncle Sam. And Prudential said, matter of fact, we want to offer. We're going to lower our bid because there's too much risk in this emerging market. We don't know about the government. What if they decide to kick us out of that country? There's too much risk. We only want to offer you $30.4 billion for your 58% stake of AIA. And ultimately, AIG went to the board and they said, I don't think so. They go to the board, they go to their investment bankers, which if you're an investment banker at this point, you're advising AIG, and you're on the sell side because you would be selling off a piece of the AIA assets. So you say, you know what, I don't think that's a good valuation for that company. Let's see what we can get out of the public markets. So let's look at what happened next. So they rejected the bid and they said, let's IPO it. People may call it a spinoff as well. What are some of the advantages? Well, if we IPO it, the market will determine a valuation. Um, you'll be able to sell equity to investors. So this is where, as a coverage banker, you're in the financial institutions looking at insurance companies, advising AIG, and if you're looking to sell off this AIA property, then you get your capital markets people in there to figure out who are we going to sell this to, what investors invest in emerging markets, how are we going to get this paper out of the door. So ultimately what happened was AIA sold it on the Hong Kong Stock Exchange, and they raised $17.8 billion and exercised their over-allotment to make it a IPO of $20.5 billion. Now, you say to yourself, well, this isn't as much as 3.4. But when you look at this scenario, AIG in this scenario sold down 25% of their stake because, I guess, what are some, if you can feel free to type this into the chat, what are some of the reasons why they wouldn't fully exit their position at this time? So some of the reasons are, this is still a high growth asset. AIG goes back and says, we should probably continue, continue to receive some revenues over the next, few years. AIA is still growing. You hit on the head. We want to continue to get some long-term revenues, a stream of revenues, rather than sell out our full position, because this makes a lot of sense. But we can get a few $1 billion now to come to us and pay that to the government. So in this scenario, your capital market is selling out to large institutional investors on the secondary market. This is where large asset managers on the institutional side are looking to take on big shares, I guess big stakes. So when you're looking at AIA, and ultimately the full value came out where the public shareholders had 67% valued at $20.5 billion. AIG has 10.2 billion ownership, and the deal came out at 30.6 billion. But this is before the market even opened. So this is pre-market. So once the market opened, what happened? The shares shot up to 17%, which means that the value overall of AIA shot to 35.8 billion, increasing the value of AIG's stake. So in one day, out of thin air, AIG increased from 10 billion to a valuation of 11.8 billion in terms of their stake. So these are the ways that investment bankers help companies realize the best value, because markets seek to properly price assets. So in this case, hopefully you're starting to get a little excited about it, like, wow, this is how the advising companies make financial decisions, and being the catalyst allows companies to kind of grow, allows companies to make business decisions. So ultimately, what did this result in? This resulted in it reset the value of AIA. AIG received money in order to start paying down their obligation to the U.S. taxpayers, so typically you and I. So this is a positive transaction where bankers and investment banks in general had a large stake in making happen. So hopefully this gives you an idea. So as you continue to look through this, remember AIG continues to have this stake. A lot of people that want to go into investment bankers say, I want to see my deal in the Wall Street Journal, and I want to be in an industry that helps make things happen. Well, I've been in that position, Charity's been in that position, and we have plenty of staff to help you navigate through getting you to where you need to be in order to be in this high demand industry. So here's the deal on the Wall Street Journal. AIA raises $20.5 billion for AIG in an IPO. But the thing is, that's not done. As you continue in a coverage group to foster that relationship, AIG ultimately started to exit their position. They said, you know what? 2 years later, they sold out $6 billion worth of their AIA shares just to continue to realize value. then a little bit later, they said, let's continue to exit our position. And this is where investment banks are helping match buyers and sellers in order to allow AIG to exit its position and allow new investors to come in and realize the value in AIA. So, and then ultimately by what's this, the end of 2012, they fully exited their stake in order, and a lot of this went back to the government because that was kind of the genesis of why they were exiting their stake. And so when you evaluate this over long term, AIA continued to increase its value and realize that growth, while AIG was able to receive more, I guess, be more business savvy with the guidance of investment banks to allow them to make the most financially rewarding decision. So hopefully that gives you an idea of what it feels like to be an investment bank. So, on a live deal, while this is all going and you're with an investment bank, investment bankers work